Welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and since June is now over, it's time for my monthly portfolio recap. So let's dive right in. All right, first chart right here is the account balance and how it's changed over time. What you guys will see right here is the blue bars indicate the amount of money that the wife and I have put into the portfolios, and the orange bars is the amount the account balance of all of the portfolios combined. You guys can see what I like to do here, as I've explained 1,000 times already, is I like to show the very beginning of the year, the previous month, and the month that just concluded, which is technically also the previous month, but you get what I'm saying. So on here, you'll see January, you'll see May, which was last month, and you'll see June, which is the month that we just finished up. We are still over $500,000 in account balance, which is really cool, but you'll notice the difference in the orange bars from May to June did go down about almost $4,000, which we don't like to see, but you know, the market does what the market does, so we just are along for the ride. Next up is the cash deployed tracker. So I do have a big change to announce, I guess, on here. You guys will see this chart where it goes June. You'll notice that there's a bunch more red. I think I'm pretty much done with my investing every day thing. I started a new job. There's a remote desktop that I have to get on, which basically disables my personal laptop. And I have, the time to eat lunch and stuff like that. I really don't feel like eating lunch and then hurrying up and like doing my stock investing every day and stuff like that. It got to be a little overwhelming. So I am probably I can probably still keep up with this, but the goal is no longer to like invest every single day. I believe in all the stocks I own, so I just want to get the money in there as soon as possible. I've been doing a little bit of AI research, and it did say that, doing a lump sum, is generally better, especially, obviously if your stocks go up. So, and then you'll notice all the way on the right side under totals, you'll notice that June was actually lower by a decent amount, the 2,800 versus, the 3,300 on average. The wife, her second paycheck was late. So she had to actually reach out to her HR and say, basically what the heck. So they fixed it. We got paid, but it didn't go to her retirement. It said something came out. So that is something that we have to look into, but that's the difference there. No, we're not, purposely investing less. It was her second paycheck. The money did not come out of that check, and literally go into her 401k account. I checked via the account activity. So we have to work on that. Maybe that means, July we'll have an extra bump of the difference. We don't know, but anyway, down here in the green, sections, total cash deployed is just over $19,000 for the year so far. We are at $3,200 invested per month, $29.23 per day, which again, we're not really going to worry about too much anymore because we're, going away from the daily thing. The projected total cash deployed for the year is down to $38,586.34. And again, this yellow area, we're not going to worry about going forward, but I did want to show it because as of last month, we were worried about it. So we're at 110 out of 122 days, which means we invested in 90% of the total days the stock market's been open this year. So next up, this is the June activity and overall patty. So first thing you guys are going to see is the activity. You guys will be able to see all the stocks we bought right here, the total amount spent on those stocks, the average price of those stocks if you're interested in that, the annual dividend paid by those stocks, and how much in added forward income we added to our patty just this month. So all the way down at the bottom, you guys can look through all those and see, if there's any of those that catch your eye individually. But down at the very bottom, we added just under 10 shares total, which would have been over 10 shares had the second investment for my wife's 401k came in, but I digress. So just under 10 shares, that $2,800 that we already talked about. The average price of all the stuff combined is irrelevant. If I could figure out a way to like not have that on there, I would, but I can't. So and then the last box is the added forward income. We added $35.41 in patty added forward income just this month, just from our purchases. So this chart right here, this is the same kind of chart I just showed you earlier about the account balances, but this one's relating to the patty and the portfolio patty as a total, all accounts across. So again, we have January, we have May, and we have June. You guys can see, so the blue bars indicate the yearly projection. That's divided by 12 for the orange bars for the monthly projection. That's the yearly projection is divided by 365 for the daily projection. So really, I focus on the blue bars. You can, all of them, if the one blue bar is higher than the next, then that goes up in the monthly and the daily as well. But nonetheless, so January was sitting at $6,800 for patty. May was sitting at $7,126. And now here we are concluding June is at 72.16. So we do like to see that just by purchasing these things, any dividend raises, stuff like that, the blue bars keep getting higher and higher. Therefore, the orange bars go higher, and the gray bars that you can't see, they also go higher. So next, let's go ahead. This is a busy one. So I'm going to try to do this as fast as possible. June passive income. So we had 16 dividend payments, 4 of which were in the ACI, my Anyone Can Invest portfolio. I track that every other week on the channel. I'm not going to go into details on those because you guys can watch that video. All the details are there. We had 5 interest payments for a total of 21 payments across dividends and interest just in the month of June. June is always the busiest because I have a lot of ETFs, and ETFs pay out typically 3, 6, 9, 12. So, yeah, again, like I said, I'm not going to go over the Anyone Can Invest, the gray ones in here because those are in a different video, or the interest because those aren't really real positions. They do pay us money, but I don't really hold a interest bearing position. I just kind of keep my money in there until I invest, and then I get interest in the meantime. So with that being said, all the other ones on here, we're going to quickly go over, and I found like the easiest way I could do it by like the frequency, like the date they were, the dividend was received. I just wanted to do it by account type because it seems to be easier. So first one is my IBA, my retire early taxable bridge account. First up, we had Visa on June 1st for $39.86. You can see all the way down here at the bottom, which is higher than the one before and higher than the one before and higher than the one before. So we do like to see that. Total Visa dividend so far across all payments is $278.16, or 5.29% of the total dividends paid in this portfolio. And we received almost one full share for free via the drip, which is also cool. So next up, on the 11th of June was Microsoft. We received $40.23, which you can see, obviously, higher than the one before, higher than the one before. You guys get the point. Microsoft's now paid $311.96, or 5.93% of the total dividends received in this account. And we've received just over 3/4 of a share for free via the drip. Then finally in this account, we had UPRO pay us $25.08. This one is going to not be as smooth as the other ones because, again, it's an ETF or like an index fund. So it's not, the dividends change a lot on this one. It's not a dividend growth position. It's just a growth position, if that makes sense. So this one was $25.08 on June 30th, which is higher than the March 31st one, but it is lower than the December one. So again, it's not anything I'm doing different. I'm not selling it. It's literally how the ETF pays, which is kind of annoying when you're trying to track all the dividends and stuff. But as long as the position's making me money, I'm still getting paid the dividends. We're all good in my book. So you guys can see UPRO is up to $126.04, 2.39% of the total dividends. And this one, since the share price is lower, I've already gotten 1.233 shares for free via the drip. Next up is the Roth. So this one had 7 payments across mine and the wife's. So really quickly, SPYG on June 24th, $18.73. SPYG is now paid $234.01, 5.22% of the total dividends, almost 3 shares for free via the drip. Next up, June 26th, $89.40, which gives from VNQ, which now gives us $950.01, or 21.21% and over 10 shares for free via the drip. That one's a very high yielder in the portfolio. That's the real estate ETF. We like that one. So next up is QQQM. I received also on the 26th. I received $30.57, which is more than the last dividend. It gives us a total of $231.37, 5.16% of the dividends paid in this portfolio, and over 1 share for free via the drip. Then in my account, we had VOO also on the 30th, paid us $157.95, which in total, VOO has now paid out $1,611.41, or almost 36% of the money received in my Roth IRA. And we've gotten over 3 shares for free via the drip. And finally, in my account, I also have UPRO in my Roth IRA because it's a really good growth position and I don't want to pay taxes on it. So, June 30th, $40.47, now up to $280.05 in UPRO in the Roth IRA, which is 6.25% of that money, and almost 3 shares for free via the drip. Then we transition to the wife's account. She has pretty much the same positions I do, except less of them. I only have 2 positions for her because it's simple. QQQM, she received $27.07, which gives her a total, this is her newest one, $73.58 in this position in her Roth IRA, 0.193 shares for free via the drip. Then VOO, she's had that one for a while. On the 30th, she also received $86.18 for a total of $752.03, 32.25% of the total dividends received in her portfolio, or 1.375%. Or 1.3, she's also received 1.375 shares for free via the drip. Finally, this is a lot. Finally, my HSA, I only had 2 positions. This is my high leveraged, super risky account because I don't care if the money's there or not. And it's actually working out better. We'll see here in a second what I mean about that. So this one I have UPRO, which is a triple leveraged S&P 500 fund, and TQQQ, which is a triple leveraged NASDAQ fund. So UPRO, $16.12, now up to $112.73, or 24.5% of the total dividends paid in the HSA. I don't drip these. I just let the cash pool, and then I buy more of it whenever the S&P 500 or NASDAQ hits a little bit of a drop. I add some more. So because my HSA isn't active, my current employer does not have a high deductible health plan, so I can't do an HSA, which kind of sucks. But anyway, so next up is TQQ. Also on the 30th, I received $21.65, which is brings our total to TQQ in the HSA up to $116.96, 25.41% of the total dividends paid in this portfolio. Again, no drip going here. All that to be said, finally over. I don't want to, make you guys do all the math or hope you were sitting there with a calculator. So let's go ahead and round these numbers up and see where we finished in June right here. So all the way on the far right, you guys will be able to see June of 2026. We made $643.61, which was actually 4.2% higher than June of 2025, which we do like to see. And we closed quarter 2 at $799.33 in dividends, which is actually 4.6% lower than quarter 2 of 2025. I didn't have time to actually go back and understand what was different. It was probably a difference in ETF payments. I don't remember what was different about the portfolio first half of 2025. I think I had Apple still and didn't have FIX. So that's probably the difference, is I think Apple's dividend was a little bit higher than FIX, which is kind of hard to believe because Apple doesn't pay a big dividend, but nonetheless. So currently halfway through the year, we are sitting at $1,542.72 in dividends and interest, which comes out to $128.56 per month, or $4.23 every single day in dividends. This is 65% off of what we made in all of 2025. So if in theory, if we were going to tie 2025, we'd be about 50% off because we're halfway through the year. But I'm really curious if we end up catching up. One of the positions in the Weiss 401k is a December only payer, which is going to be cool. So if that's true, it's really hard to find dividend information on that because it's like a mutual fund within a 401k and all kinds of stuff like that. But if that thing pays out what I'm expecting it to pay out, we're going to zoom past 2025 total at the end of the month, or at the end of the year, I should say. So keep coming back. Stay tuned, I should say. So next up, career dividends. This is a super high overview. This is going to take long, but you guys can see each individual account, how much we've received in dividends for each individual account, the percentage of our total dividends paid from each account, which my IBA, I want to be the highest because that's the one we need to live off of when we're retiring. Which it is, it's 32%. The total number of drip shares purchased, for free. And then down at the very bottom, the grand total. So we've now received $16,445.78 in career dividends across all of these accounts. And 147 and a half shares for free via the drip, just for using those dividends to buy me more shares, which buys me more dividends, which buys me more shares, all the things like that. So that's really cool. So over $16,000, over 147 shares for free. We like all that. So speaking of that $16,000, what I'd like to track right here are the dividend snowballs. This is just how much faster the dividend snowball is rolling. So we only have a change to the buy 1,000 chart. I'll quickly show the other one right after I'm done talking about this one. So this buy 1,000 chart, you guys can see down here at the very bottom, it took us from February 27th of 2026 to June 26th of 2026, which is 119 days to cross from 15,000 to 16,000. Now you'll notice that's significant. I don't know, not significantly, but it is higher than the 74 days from the previous one, the 77 days from the previous one. But that's just the timing of dividends and when we got it and stuff like that. So I'm not worried about each individual one getting higher or lower than the last one. What I want to do is I want this number of days between to always be lower than the average number of days between. I did not get the information because I forgot of what our last average was. But we went from, right now we have 204.8 days. So let's just call it 205 days. Every 205 days, we should be crossing another $1,000 milestone. We did the last one in 119. So it was probably, I don't know, 208, 209, something like that. You guys can go to the last video and check it if you want to, if you're nosy. But yeah, it was probably 208, 209, something like that. So because we were at 119, it did drop to 204. So now my goal is to make sure that we get to 17,000 before 205 days, which we will. Like, we're not even sniffing the 200s anymore. So that's cool, and it'll keep lowering it. And again, it's kind of like a self-composition, which is nice. So this other chart right here, by 2500s, we didn't reach the $17,500 mark, which is the next milestone in this one. So there's no updates here, but same thing. You guys can see the last milestone was reached in 240 days. The average is 728 days. So as long as the next one comes before 728 days, which it will, maybe not next month, but maybe the following month. I don't know. But yeah, we'll get there. It'll pass it. It'll keep that bar moving and stuff like that. So next up is diversification. Diversification, this is all of my stocks and how much I have invested in each of them. This is the pivot table version. If you want to look into that, you can. You guys can see the grand total invested down at the bottom, $344,059.69. Or here's the pie chart if you like looking at pictures. This shows you, 40% of the portfolio in S&P 500, 14% in blue chip, 10% in NASDAQ, and so on and so forth. So I'm not going to go too much into details on that. Right here is benchmarking. This actually, for the first time, might actually be updated all on Fidelity when I needed it updated for my screenshot, which was really cool. So you guys can see the last month of all of my portfolios were in the green. It looks like most of them underperformed, all the indexes, which again, that sucks. I don't like that. We did have our HSA, again, my high risk one, 24.8, basically 25% in a month. That thing's killing it. You guys can look at the 1 year on the HSA is up 113%. That's not cumulative, by the way. That's like annual or monthly kind of thing. I don't know how to explain that better. But yeah, the Weiss Roth IRA was up 7.5%. My Roth IRA was up 8.4%. So those did really good. But the other ones, yeah, the anyone can invest, retire early, didn't do as good. I think Microsoft pulled us down a little bit. I don't think FIX had as good of a month, stuff like that. So not worried about it too much. This is just, again, me being transparent and showing you all this stuff. You guys can, pause here and look at this more if you want to. So lastly, but not leastly, is my net worth. I'm one of the few people on here that actually shares with you guys my net worth. I find it fascinating to track it over time. Right here, I try to put on the average net worth. I don't know why these charts are different and which one you want to care about, but pause it here and look at where you guys fall in this chart. I put a red box around my net worth and age on this percentile chart, just so you guys can see like where I should be and where I am. So all that being said, I was hoping that we would cross $800,000 for the net worth this month, just because we were really close. We were at $789,700 in May. But here you'll see we actually dropped by about $3,000 this month. Again, nothing we did wrong. The real estate value went up. Checking account balance stayed about the same. Retirement accounts went down a little bit. The cars actually increased in value a little bit, which, is hit or miss, a couple $100, nothing crazy. Other assets went down a little bit. Real estate loans went down. Credit card debt is down. Again, I don't carry credit card debt. It's just like when I got this information, it was Wednesday. So I have $39.66 to pay off by Friday, which I pay every Friday. So yeah, our net worth as of June 30th sits at $786,748.64. As I said, and as you can see on the far right, was down $2,951.39 to no fault of our own. The stock market just didn't cooperate as much as we would like to this month, so our net worth went down a little bit. And then here's the little chart again. This, I don't know if this is helpful or more helpful or not, but you guys can see the ebbs and flows of the net worth over time, with as well as the date and the actual value. So you can see we're basically flat according to this chart. Like, it did go down. You can see a little bit of a decline there, but not enough to matter. Yeah, that's the net worth. That's my portfolio recap. I hope you guys enjoy it. Sorry for the rambling. There was a lot of dividends to talk about this month, so that section took a lot longer, which is why the video is longer. But as I said, I don't do these with any script. I really appreciate you guys watching. If you guys have any thoughts, comments, questions, concerns, leave them in the comments down below. Make sure you guys are subscribed. Make sure you hit the like button. But until next time, see you.